All right, welcome everybody. Pups Office Hours. It's June 22nd. We are in the middle of a mini bear market rally, and I think everybody is thinking, where do we go from here? So before we dig into the charts, just a little bit about myself. My name is Danny Naz. I've been in these markets for a number of years as a swing trader, now as a day trader. And really my forte is following and finding the relative strength in this market. And I can tell you, I've looked at these charts. This is not going to be a normal office hours, just because there's not as many relative strength charts out there, but we'll get back to that in a minute. So this is my office hours. I run this every 2 weeks on Wednesdays at 7 p.m. Eastern Standard. I mainly keep it for my members, but sometimes I invite some non-members in just to give them a peek behind the curtain, show them a little bit about my process and what I do. We're going to run about 60 minutes this evening. As I said, it's going to be a shorter version, and we'll review everything that we normally do. So we'll also do some chart requests in the Q&A session. So if you have any questions or if you have any chart requests, feel free to drop that in the chat now, and I will get to that shortly. And of course, I'm always doing my charting on TrendSpider. It's my favorite charting platform. I've used them all, and it's just where I landed. It's where I feel most comfortable. I feel from a newbie and an experienced trader and chartist perspective, I think it's the best platform out there. I do my options flow and dark pool data on black box stocks, and my algo trading ideas, I look at TradeEtics. And for those of you who are not members, I do run an educational platform called Pup University. These are the current, well, these are the old rates. I just raised my rates. So fear not, for those of you who are already members, these rates are locked in for you for life. I have to update these slide decks, but the rates have gone up. Hey, it's inflation. Everything is going up, right? Gas is going up. Pups rates are going to go up too. And of course, there's the executive plan. And yeah, this again has gone up, and I've added something else. I'm actually toying around with adding a monthly subscription service to this as well, and I'm very close to launching the community-based app as well. So enough about that. Let's stop sharing that slide deck and let's get into some charts. So bear with me 1 second while I get those charts open. Okay. Here we go. All right. So as usual, we are going to go through our sector. Well, we'll go through our indices, and then we'll go through our sector ETFs. And as you can see on the right-hand side, we'll go through some charts as well. So yeah, I think let's go down to the daily chart. And obviously, I've been charting out a lot of trade levels for SPY. Let me also turn on my multi-factor. These dotted lines are just the anchored VWAPs from the weekly chart. And so you could see we lost this COVID low anchored VWAP back in May, and we just had this waterfall action since that 9th of June. And we tried to recover here on June 15th, and it failed again, another big gap down. And now we're 3 days green, and we're seeing a lot of resistance on this 378 level. So for me, that's the level I'm going to be watching this week. I think if we can get over 378, we'll probably come up to about 387, maybe up to 390, where you can potentially get a retest on this COVID low anchored VWAP. So yeah, I mean, I've had this target zone to the downside for a little bit now. We dipped into it last week, and now we're bouncing out of it. Now, do I think that this was the bottom? Honestly, I don't. I do feel like we'll probably have a little counter trend rally, maybe up to that 387, 390, maybe even as high as 400, maybe into this declining 50 simple moving average. But I do ultimately feel like we'll take another leg lower. And so, you know, we just have to understand that we're still in a bear market. Nothing has changed about what's going on in the market, right? It's all the same. So here's a counter trend rally, here's a counter trend rally, here's a bigger counter trend rally, and I'm expecting another counter trend rally, maybe up to this anchored VWAP here first. And if we can get past that, then out to this 50 simple moving average here. So that's what I'm seeing, at least on SPY. I mean, it's going to be pretty much the same for most of the indices. But yeah, I think for this week, watch 378. If we can break through 378, we did test that today. Then I think, we have a shot at moving higher. But if we fail again at 378, I would say either tomorrow or Friday, watch for the next leg down sooner rather than later. And then this would be the range, 356 to 365 over the next couple of weeks if we fail at 378. If we break through 378, then I'll have a revised timeline on when we might hit this zone down here. All right, so let's move over to the Qs. Obviously, very similar story, looking at a very similar move. Wave 1, 2, 3, counter trend 4, and potentially wave 5. And so if this is wave 5, we're looking at 1, 2, 3, 4, right? 4 can come up a little more. And then another wave 5 down is what I would be expecting. And again, I'm not anticipating this move. I'm just observing what the charts are telling me. First we got this rejection here off that COVID low anchored VWAP. That sent us right back down to the December 2018 low anchored VWAP. You see we had come down here before we bounced. Now we're right back down here, waterfall action. And now we have this island reversal coming up. But look at these wicks right here, right? A lot of selling pressure. We're unable to push through these levels here. So let's take a quick look at some of the levels. And, this is looking very much like 285, right? So you can see here, when we started to fall, we bounced at that level. We wicked 2 times at that level, but then we cheated, right? We gapped below it. And then we tried to retest it here and failed. And we tried to retest it again here and we failed. So what that's telling me is, for the moment, 285 is going to be the key level to break to the upside. We break 285 to the upside, and I'll just turn on my gap indicator, but you'll see that we've got some gaps to fill, right? We got a gap here. We got a pretty big gap here. Then we have a little bit of a gap here and here. So yeah, I mean, that's what I'm watching for short term right now is over 285. If we continue to fail this week, tomorrow and Friday, similar to SPY, then I would expect a retest of 276 and then potentially a retest of this bottom at 269. And then towards that bottom, I would expect to move back into this zone here between 266 and 258. So let's take a look at IWM, at our small caps. We're in a pretty clear down channel, and you can see, move down, bounce, counter trend rally to the top, move down, bounce, counter trend rally at the top. And now we move down again. The question is, do we bounce or do we just continue to fall? And again, my inclination right now, since CPI is out of the way, PPI is out of the way, FOMC is out of the way, and quad witching is out of the way, that, it gives me that inclination that maybe we're ready to start, having our next bounce, but anything can happen. We do have a lot of Fed speakers this week. I should have probably went over this at the top, but we have jobless claims tomorrow. Jerome Powell is also testifying on monetary policy tomorrow at 10 a.m. And then on Friday, 7:30 a.m., St. Louis Fed President James Bullard will speak. And then we have 5-year inflation expectations and then new home sales. So yeah, a lot of noise still this week, but just not as much noise as we had, last week. So going back to this chart, what I'd be watching for here, can we hold 164? If we can, we'll probably test 172. And then through 172, I'll turn on that gap indicator. You can see that we've got a couple of gaps to the upside. And I like these gap fill plays if we can get there, because they tend to be pretty decent trade ideas. But for now, still very clear downtrend, trading under our 200 SMA, trading under our 50 SMA. And the other thing to note too, when you're looking at these charts, whether it's the indexes, the ETFs, or just your regular charts, look at the moves back into the 50 simple moving average, right? Rejected here, rejected here, false breakout, false breakout. So if we do see a counter trend rally into this declining 50 simple moving average, this is a potential area to go short if we fail to break above this level. And keep in mind, you can wick above it one day, trap the bulls, and then gap down the next day, and then you have that waterfall move. So you can't get suckered into these counter trend rallies. They are very tradable, but you have to exercise proper risk management and take profits quicker than you would in a normal market. All right, so let's move on to the VIX. And again, we are on the daily chart. And you could see all of these spikes since the COVID low, right? And then, it's been declining, and now VIX is still slightly elevated, but trading within a range. So it doesn't really adhere to technical analysis, but we can infer to this chart right now that we're still kind of declining. If we see a spike above this channel, then obviously that's something to be concerned of. But I would watch for this to continue to fall. And if the VIX and volatility continues to fall, then we should see a better trading environment. But for now, we're still slightly elevated on the VIX. So here comes our first sector. And for the sectors, what I want to do is I want to just go up to the weekly chart just so we can see the big picture. It really helps to zoom out. And so, of course, the red line is going to be our 200 simple moving average. Our blue line is going to be our 50 simple moving average. So you can see we had a nice bullish cross right here. This is your golden cross. And, we've been in a nice channel here on energy for a good while, right? But we're struggling with the center channel right here. And now it looks like we're coming back down. So energy has been selling off. I think if we look at the daily chart, there was some bearish divergence here, right? So bearish divergence, very simple. What we did is we made a high and we made a higher high on price, but at these same wicks, we made a high on RSI, but we made a lower high on RSI at the higher high on price. And so price is telling us one thing, RSI is telling us something completely different, and price declined from there. And so now what we have to watch for is where do we go from here? Now, something I'm just noticing. So we have a low here on SPY. We have a higher low for now. We have a low on RSI, and we have a lower low on RSI at that same higher low here. So that is hidden bullish divergence. And so that's something I would watch to see play out. Do we hold this 50% Fibonacci retracement at 72.39? For now, we are, right? We bounced twice so far in the last 3 days. If we continue to hold, then we possibly can see energy rebound and move back up to this 78.54 level, which you could see we struggled at initially when we came into it. So keep a close eye on this level, 72.39. We are getting to oversold on energy here on XLE. So could see a potential bounce here on energy in the next week or so. So keep a close eye on that trade. Let's take a look at solar. And again, let's go up to the weekly chart first. And you could see, we're certainly in a declining channel here, but you could also look at this as a massive bull flag. Now, for now, we're holding in between the 200 SMA and the 50 SMA on the solar stocks. And you could see some of those solar stocks here, ENPH, SEDG, RUN, and FSLR. But we also have a weekly squeeze setting up, which I really like. And, I would say solar, has been one of the areas that I've been watching along with Chinese tech. That's KWEB, and we'll take a look at that. Actually, it's not on the list, but we'll take a look at that next. But solar is looking more interesting than most other sectors right now. And so for now, you could see we failed at that 200 SMA, but we are trading in between the 50 and the 200. And so I'm just keeping a close eye on 73.21 on TAN. If we break above that, then we should test the 200. If we break above the 200, 78.64 and 84.06, I would be watching to the upside. Let's look at KWEB. For some reason, it didn't make this list here. So I'm just going to edit this real quick. And let's put KWEB in here. KWEB is going to be your Chinese tech stock names. And this is another sector that has been showing some relative strength relative to the market. So a couple of things. let me turn on my declining to 21 moving average. So we broke through the 21 moving average. We broke through the downtrend line and we came above 31.47. Now we did fail at close underneath that level right now, but I'm still very interested for quick trades on Chinese tech. It's still a risky sector in my eyes, but certainly not from an investing, certainly from an investing standpoint, but not from a trading standpoint. And we'll take a look at some names that are in this, PDD being one, and there's a couple of other Chinese tech stock names that we'll take a look at. But I think if we can hold this 31.47, then we've got a shot at a trade up to the 50 simple moving average and above the 50 up to the 200 right at the supply zone. So that's the end of our sector overview. Let's take a look at some individual names. Now, I'll start off here on the weekly chart. This is Altimmune, ticker ALT. This is a biotech. It's a risky trade, but something that showed up on my relative strength scan last week. And you can see very clear Elliott wave move here. You have an Elliott wave, you have a impulse wave 1, 2, you have a nice, very nice bullish 3, and potentially setting up in a triangle 4 here. So keeping a close eye on this. I wouldn't, me personally, I'm not going to put a trade idea out on this. It's just, it doesn't fit the risk profile that I like to normally trade off of. But if your risk appetite is a little higher, through 928 here, you can see we closed above it. I'm targeting this zone up here for my wave 5. So we're clearly trading over the 200 simple moving average. But like I said, for me, my risk tolerance, I don't really like to trade biotechs that much. So next up is CEIX. This is a trade idea that I put out in May over 50.51. We did break that level and hit our first target at 57.82. And you could see we hit it and then we failed. And then we gapped back below the trigger and now we're going back through it, right? We closed right on top of that trigger pretty much. So again, bullish hidden divergence showing up, higher lows on price, lower lows on RSI. That's your hidden bullish divergence. We also have a squeeze setting up here. So I still like this back through the trigger. Next up is Chewy. Again, still pretty much in a declining move here, but we did break over the 50 simple moving average. We gapped over the 50 simple moving average yesterday and closed higher today. So watch for Chewy to make a move back through 32.71. I would target 35 and then 40.89 to the upside. Next up is ENPH. This is part of that TAN solar ETF that I was mentioning. I'm just going to turn that 21 moving average off. And so you could see right here, we have that swing high anchored VWAP. That's that purple line. Actually, let me turn off that because we don't need that. We don't need multi-factor anymore. Clean this up a little bit. And you can see we back tested and held for 2 days last week and then bounced, gapped over yesterday, hit our next target at 197 and then failed at that level again today. So if you didn't take this trade back through 179, as noted on the trade idea, watch for a move through 197. Probably see a quick move to 200, and then I would target 210 and then 217 to the upside. I think 217 will probably be the end of the trade for me, mainly because that's the 618 retracement. You could also see how it acted as resistance back here and back here. So very tradable from 197 to 217, or wait till over 217 and then tradable up to 245. Next up is Go. This is Grocery Outlet Holdings. Another one that I felt like it had a pretty nice Elliott wave setup. You could see potential wave 1, 2, and it looks like this could be wave 3 here. And so I had some upside targets that I put 42.11, 43.19, 45.46. This is the area I would watch though, because 42.11 to 42.29, that's your prior highs here. If we break through that level, what I would do is go up to your weekly chart and you could see, we have some room up to probably $47. You know, you'll see a little bit of resistance, you know, probably at 45, you know, but that 42 level here as well. These are the three levels that I would watch to the upside here on GO. It's been showing up on a lot of relative strength scanners lately. Here's HNRG. This is Hallador Energy Company, another energy stock. This is, again, the weekly chart. You can see a very nice rising weekly channel. Let's go down to the daily chart. I'm watching this over 784. If you look left, you know, this is going to be a level that acted as resistance before. Through that level, 982, 1297, and 1427 to the upside. Next up is IDYA. This one looks like we're just starting to get off that 50 simple moving average. We've got room on RSI to go higher. And I would say watch for a move over 1326. You could target 1569 and 1725 to the upside. That would probably be where I would stop, right at the declining 200 simple moving average. That would be, you know, the area where I would say, you know, you got to be careful. But we're seeing a lot of these trades where you're getting over the 50 simple moving average and you're still under the 200. This is very tradable. You know, again, you just have to use proper risk management, have a good, well-placed stop loss. But, you know, this is a trade right here, right? And, or if you're getting into that 200 and you're seeing weakness, you could short it off that level as well. So again, you have to pick and choose your battles, what you feel most comfortable doing. But there's a lot of ways to skin this cat. That's just one. All right, next up is LI. This is Li Auto. This is I think it's a Chinese EV player. And so you can see we're coming up to 37.45. That was prior highs back here, and resistance here and resistance here. So the trade is simple. Over 37.45, I would be targeting 43.03 and 50.15 to the upside. Keep in mind, RSI is a bit elevated. So, you know, this might get rejected first and pull back. You know, it's always nice to look at the weekly chart to see what's going on there as well. And this is a little clearer in terms of where that resistance is. We also had a weekly squeeze fire off today. So I think, you know, that's very important to note. Next up is NEO or NIO, depending on how you pronounce it. So, you know, you could see we had a declining trend line here. Then that decline got steeper, and it got a little steeper, and it got a little steeper. And now we're finally starting to break that range. We dipped into that IPO weekly range. Let's go up to the weekly chart. And we're also back through this center channel line. Came right down to that 786 Fibonacci retrace from this swing low right here to this swing high right here. So, you know, let's keep an eye on NEO. Let me go back to the daily chart. We could see a move up to 2403. That's probably where the trade stops, but over 2403, I think you could trade this up to the 200 simple moving average right at around 2750. Next up is PDD. This is another one that I was talking about that's part of KWEB. Let's look at the weekly chart first. So very interesting spot right here. Really like this over $68 because we have that 200 simple moving average that's just starting, right? You see 2 weeks it got rejected off of it. And now we have a declining 50 simple moving average that we got rejected so far off of this week. Another one that's got a weekly squeeze firing to the upside. But if we go back to the daily chart, we also have a declining 200 simple moving average. Now, this is a great example, right? You break that 50 simple moving average here. The trade was right to the 200. You quit the trade right there. You're pretty much getting in at the bottom and you're getting out at the top. It doesn't always work that way, but it is a way to do a defined trade. Now we have to wait. Do we break over this 200 simple moving average and hold? We did slightly here. There's a slight bull trap right there. And it sent it right back, and we retested that downtrend line almost perfectly right here, and we bounced. So it looks like we've got a little bit of a pennant forming here, but very clear trade. Over this 200 simple moving average, you could trade it up to 67.74. And if we could crack that level, I think we've got a lot of room to the upside. So we have supply, that doesn't start until about $90. So I think, what is that? Probably like a 30% move. Yeah, just about 34% to that supply zone. So keep a very close eye on PDD. Looks very tradable here. Next up is STNG. This one's been showing amazing relative strength in the market. I've been on this since $20. We're almost up 100% since that call out back in March. And, the shipping sector has definitely struggled a little bit in the last 2 weeks, but this one has really shined. This one has shown not only relative strength to the market, but relative strength to its sector. So, and I think one of the reasons is because this is a shipper, but I believe they specialize in shipping petroleum products. So your oil, nat gas type of products. So yeah, keep a close eye on it. Really nice backtest on this 382 retracement and the 1618 extension back through 32.28, and I think we start to move up to 46.69. And last but not least, VRTX. So this one, I just saw it had a really nice setup. So let me go up to the weekly chart. You could see this is very cup and handle-ish, right? So cup and handle, you've got your cup, and then you've got your handle forming here. It's very, very distinct pattern. So let's go back to the daily chart. And, today we broke through that wedge and closed over it. What I would say is watch for a move over 275.98, basically 276. Through 276, you could see a move back up to the highs here at 293, be about a 6% move. But looks pretty good from the breakout of 276 to 293. And again, we're trading above our 50 simple moving average and above our 200 simple moving average. Those are the types of trades that I really like because they're showing relative strength to the market. So that pretty much is what I'm looking at least for the next couple of days. I know Al has a question. So while I'm answering Al's question, feel free to drop any chart requests or any other questions that you might have that I can go over. So Al, you're asking a question for later in the hour. What do technicals suggest, if anything, for LTBH investors? So let's take a look at LTBH. LTBH. Are you talking about long-term buy and hold? I'm sure. And I'm sorry, that's probably what you meant. Yeah, so, okay. I think the best thing, if you're a long-term buy and hold type of investor, the best thing you need to do is look at your weekly chart. So, if you're looking at names like, Apple, for instance, you have to be very careful with tech. In a bear market, nothing is safe, and certainly tech is not safe. If you go out to a monthly chart, right, I think it's even clearer where we are and where we're going. I think we have a lot more room to the downside. So I'm not a big proponent of buy the dip, nor am I a big proponent of dollar cost averaging at this moment. I'm not saying dollar cost averaging is not a good strategy. In general, it is, but in a bear market, I don't think it is, because I don't feel like we're close to a bottom just yet. There's a reason why I say that. It's not necessarily from a technical perspective, because there's always ways that you can look at a chart and say, well, this looks bullish or this looks bearish. But the minute that the macro environment changes, all technicals go out the window. There's still a war in Ukraine, which is putting pressure on commodities and agriculture products and oil and gas. There's still supply chain issues. There's still looming issues with COVID. We're in a mid-cycle election year, right? A lot of things going on, a lot of balls to juggle in the air. And so what I would say is for long-term buy and hold investors, I think the Two things that we need to watch for. Number one, when the Fed eases off on quantitative tightening. That's the first thing. The second thing is the end to the war in Ukraine. I think if you get one of those, it'll start to send the market higher. If you get both of those, I think that will be the signal to start going long on growth and tech stocks. I think that will probably, those two things combined, will probably start a new bull cycle. But until those things change, I don't feel like we'll either A, be out of a bear market, or B, at the very worst, consolidate and try and form some sort of base. One thing you could also look at is stage analysis. I don't have a chart that I can put up at the moment, but just go to Google and look at stage analysis for charts. And we're clearly in a stage 4 decline. So we need to wait for the general market to base, and we can go and we can look at SPY. And, I'm targeting at least at a minimum down to 350. Right now we're at 370. Why 350? Because we have a 50% retracement from the COVID low to the COVID high, to the post-COVID high. And we also have that 200 simple moving average here on the weekly. And I think that's going to be a key level. If we lose that level, 339 would be the next level I'd watch. That was the prior COVID high. And if we lose that level, and again, that's my zone that I'm watching, then I think your last line of defense is the 318 or 318 at the 618 retrace. You lose that, and there's obviously things going on that I'm not foreseeing. There could be other events down the road that could continue to send us lower. Something, that could, it could be the Fed continuing to tighten and raise interest rates and it having no effect on inflation. That could be one factor that continually sends us lower. And so this is not the environment to be buying dips. This is not the environment to buy now and hold long term. We have to wait for some sort of base to form. That will be the signal, at least, to take a shot at long term. And listen, you could throw everything I just said out the window, because there are always going to be sectors and individual names that will show relative strength within a bear market. And you see some of the names that I've been putting out. You see some of the names that we've talked about today. They're going up while the market is either flat or going down. So that's my job. My job is to find the relative strength. Your job is to look at those charts objectively and say, is this a company I want to invest in, or is this a company that I want to trade? And again, that's up to you. I can only present the ideas. But yeah, be patient. We had a 13, 14-year run post 2008 economic crisis, housing bubble burst, right? We had a 14-year run. We had 14 years of gains. It is not beyond the realm of possibilities that we have a 2-year bear market, 18 months possibly. We have to look at the big picture. We have to zoom out and be objective. But the reality is, you go to the monthly chart and, we got rejected by this top channel right here. And now we're coming to the middle channel. What happens if we lose that middle channel? Well, we're probably going to go to the bottom of the channel like we did for the COVID low. So this is what you have to keep an eye on. Be patient. Yeah. All right, let's take a look at AMD. So AMD looked great through 100 going back a few weeks ago, came right up to the bottom, right up to the top of this down channel, and then just got rejected and fell right back down to 8250. So 8250 is the key level for me. You can't hold 8250, then we're likely going to see 7225 to the downside. We can look at the weekly chart. It's going to pretty much tell us the same story. We're in a declining channel. We're at the bottom portion of that channel. So the likelihood is, if we can't break it back above 8521, then we're probably going to see that 72 level that I mentioned. Let's take a look at MO. I heard about MO today. Somebody was talking about it on Spaces. Yeah, it looks like a big move down. Don't know why. Um, yeah, I'm not really sure why that happened. Let's go up to the weekly chart. Interesting. Okay. So let's look at some potential support levels. So we clearly lost that level. Yeah, $40 would be where I would watch next, and then 35.84 to the downside. Yeah, maybe $36, and then possibly 33, and then 30. These would be the levels I would watch to the downside. That's a pretty wicked move. We lost the 50 and the 200 all within, a couple of weeks. So, and then here you're trading well below the 200 here. So for me, this is a no-go zone either way. I wouldn't be buying this, nor would I be shorting it. It seems like a pretty wicked move to the downside here. Let's take a look at Meta. I was looking at this today also. Bounced right off that 1618 extension to the downside at 155. I think that's a pretty key level for us to hold. Levels to the downside, 149 and then 122, certainly possible. Again, trading under its key moving averages. This is not, again, not a buy the dip type of scenario. Look how far we're extended now off of these moving average. Another thing that I also like to watch is how far extended on the daily are we off of that 21? We're pretty far extended. So if you're looking to short, you wait for rebounds into that 21 EMA. Look how all these wicks came into this level. Great opportunities to short here as well. So watch for that counter trend rally back into the 21 EMA. You can't break it, short it. If you break it, you could trade it up to the 50. You break the 50, you could trade it up to the 200. All right, let's also look at Ford. I haven't seen this one in a while. Yeah, obviously that was a pretty clear wave 5 top right there. Let's see. Yeah, this looks pretty nasty to the downside. Riding that center channel down. Obviously, I haven't looked at this chart in a while. So, let's see. Yeah, so we're coming up to prior support right here, 1119. You lose that level, and I think you're seeing a move down to 949. But yeah, it doesn't look great, trading under all your key moving averages, which pretty much are all declining. All right, let's look at TAN. Where do we find support? So looks like we backed to, so here's a good chart, right? So it looks like it might be a cup and handle here. So let me get that charted out. So you have your cup and you have your handle. So it looks pretty decent here. As far as support, we came and back tested that 236 retracement at 66.50. So I would watch for a move back over probably 73.21. In reality, you want this over the 200. Once we get over the 2, look at that perfect rejection right there off that 200 right there as well, rejection. So can you trade it up to the 200? Yes. It's not like a big trade, maybe a few percentage points, but the bigger move would be over the 200. We get over that 200 and we can make a move up to 84.06. That's your 618 retrace. And then over there, you're probably going to look at a move maybe to 89, potentially back up to $100. Yeah, Al, we just have to wait for the macro to improve. Without the macro improving, the market's not going to improve. We've got a strengthening dollar. We've got rising inflation that no matter what the Fed is throwing. Listen, they threw a 75 basis point rate hike last week. Let's see next month what that looks like in terms of inflation, right? If they make a dent, then they know that a 75 basis point hike did something, and then we'll likely see another 75 basis point rate hike for the next FOMC. But they're going to continue to raise rates so long as inflation continues to rise. If it starts to fall, they'll probably slow the pace of QT, but we really need to at some point get to either flat rates or quantitative easing. So I don't see that happening this year. More than likely, maybe Q2 of next year. But again, who knows what's going to happen from now until then? At the rate the economy is going, although the talking heads will say the economy is strong, or job numbers are strong. I think regular people are feeling the pain of inflation and higher gas prices, and so I don't think just looking at history in terms of political elections, if all things being equal and everything is the same now until November, then the Republicans probably take back or take the House and the Senate, and then who knows how the market will react till then. So my gut feeling based on what I'm seeing is we'll probably continue to fall into the fall, no pun intended, like until the election. And then maybe we see a bigger rally into the election. Seen it happen so many times before. And then who knows post-election, depending on what happens, how that will affect the broader markets. Oh, okay, I see. So Rena's saying because Biden was trying to lower nicotine in products, that's why MO was going down. Government might be banning e-cigarettes. Got it. All right. All right. So any other questions or charts that I can go over? Like I said, now is definitely the time to be patient. There are some inklings of relative strength in the market, but we're in a period where we've had a pretty big across the board drawdown where no sector was safe, not even Bitcoin. So what we're waiting for now is really for new charts and new sectors to emerge with relative strength. They will. Don't worry. They will definitely start coming. We just have to be patient and wait for that to happen. So yeah, let me take a look at Bitcoin. I go up to the weekly chart. It's always good to go to the weekly chart. You see the bigger picture. I could have told you weeks and months ago in this decline, the minute that we lost this wedge right here, we were headed to 18.9, right? First stop was always going to be that 200 SMA, but it blew right past it. Oh, 18.8, I was right. 18.860, right? This is pretty much this high when we had that big bull run back in late 2017 to early 2018. This is where if you were in crypto, you probably heard about it early to mid 2017. Maybe you got in at around 3K, 5K, 10K. People probably bought at 20K. They bought into the hype. And then we had that multi-year or 2-year drawdown right back into that 50. And now we're slowly making our way back up, right? Hit that 68,000 mark. And now we're coming back down. The world is ending. The sky is falling. Like Bitcoin has never done this before. It has, and it will continue to do this. So where I see this going, okay. So certainly 18.8 looks like a pit stop to me. I think personally, we're probably heading closer to 14K and then possibly back down to 11.5. This is probably the area I'm most interested in watching and potentially accumulating around this 11 to 12,000 mark. It certainly can go lower than that. We can go up to a monthly chart. And what we can do here, and I'm doing this on log scale. If you don't do it on log scale, that's what it looks like. You can't chart that stuff. You do it on log scale, it's much easier to chart. So let me turn off the moving averages. We really don't need those at the moment, but I'm going to look at this channel right here. Any surprises? We're right at the bottom of that channel. So yeah, I mean, this is definitely an important level for Bitcoin to hold. But if it doesn't hold it, then I think it's likely we come back down to that 11,000 mark. And you could see that acted as prior resistance until it turned into support. But since we broke out this level in October of 2020, we have not retested it. So I think that could be a good level to watch for when we get there, if we get there, because anything is possible. Okay, Leo wants to take a look at Tesla. Sure, let's look at Tesla. We're looking at this monthly chart. I had a rising wedge breakdown here, putting us right at our target zone. This is a wide target zone, 500 to 638. Still looks very likely to come into this zone, maybe on the next leg down. We go to our weekly chart and had a very clear 5-wave move up, ABC, target zone, 532, pretty much. That's going to be your COVID low anchored VWAP. Go down to our daily chart, and you could see we're still trading within this wedge. We could see a break of the wedge, this week, next week, if we get this counter trend rally that I've been talking about. We certainly can make a move all the way back up to 800, and we're still bearish. Okay. So yeah, I mean, but ultimately, I'm looking at this downside target, and a couple of reasons. 1382 extension off of our wave WX, but also prior wave 4 low. Very textbook after a 5-wave move. You do some sort of 3 to 5 wave move back down to your prior wave 4 low. And that's exactly where my 138 extension off of this level is. So that's what I'm watching for on Tesla. Yeah, Raina, great point. So, we're going to have earnings season starting not too long from here, probably another 2 weeks or so, I think. Let's look at maybe Goldman Sachs. So July 18th, so just about 3 weeks from now, we'll get our earnings, our big earnings starting to kick off. And yeah, I agree. I think we'll probably have bad reported earnings, but what I'm more interested is the guidance. How is everybody going to guide? My gut feeling is companies are going to guide lower, and that's likely the next leg down. So we could potentially rally for the next 2 to 3 weeks into earnings, but once once you have these banks start to report and it doesn't look good, I think all bets are off. And then that first tech earnings, I don't know who it is, but if that's bad, man, that's the next leg lower. Yeah, I think great point for bringing that up, Rena. So yeah, I mean, like I said, very tradable once we start to see some relative strength in certain names. But again, my thesis is still to the downside, and I never want to come into any day or week with bias, but we have to be objective in terms of what the market is showing us. The market is only showing us more pain and more downside to come. But if we have a long-term perspective in mind, let's just look at, let's go up to the weekly chart and let's look at 2008, right? This big drawdown, right? It was 57%, kicked off a move that lasted 14 years and went up almost 573%. So, that's just looking at this objectively from a long-term perspective. You have to expect going up 600%, in however long that was, 14 years, you have to expect that we're going to pull back from that. And listen, I don't want to even say this, but it wouldn't even shock me if we came back down to these prior COVID lows. This was just an anomaly of a year post-COVID. So many things were happening. So much money was printed. So that's why I'm saying that, you know, this bear market can last for a while. But in any bear market, you're always going to have these counter trend rallies. And like I said, sometimes they could last a couple of days. Sometimes they will last a couple of weeks. And they are tradable if you are nimble. Tesla. Yeah, I will. Ben, do a chart request in the university, and I'll post a chart. But yeah, let me know if there's any other questions. You know, we have a couple more minutes till the top of the hour. Any other chart requests? Yeah, my pleasure, Raina. Hope you enjoyed your vacation. Let's go back to hours. Yeah. So, you know, like I said, we're not seeing too much relative strength in any particular sector. Maybe Chinese tech, maybe solar. Those are the two that I'm really watching. Here's Google. So Google coming into 2259. That was a 382 retracement. I think if you break over that level, you know, 2300, 2359 to the upside is what I would be targeting. And Bros, I haven't looked at that one in a while. Oh, nice, nice bounce off of that low. So we have our IPO low here. Then we need a low here. It's possible we're at the bottom of a channel here. Still need some data to really see it, but nice gap fill post earnings here. Came right back up to these prior areas of support that now have turned into resistance. So yeah, I would say over 32.42, you could see 43. And then over 43, you possibly could see a move up to 62. It's certainly going to be levels in between, but you could see there's areas of consolidation there. And then if we look at all the volume prior or after the previous all-time high, no surprises why we stopped here. All of this supply up here, all the people that bought Bros up here are going to get sold into. So definitely could see a move from 32 to 43, but once you get to 43, you have to be careful because you have all of this supply up above. Let me know if that makes sense, Alfonso. Cool. All right, if that is the last chart request, I'm going to wrap up this session of office hours. I do appreciate everybody that tuned in live. And if you're watching a recording of this, I'll likely post it on YouTube in the next few days. Yeah, please like this video, subscribe to my channel. It's greatly, greatly appreciated if you enjoy this content. And listen, you know, the week isn't over, but we still have some room, I think, to the upside. I think it's just the Fed talkers right now, and we'll have, I think, Jay Powell tomorrow, Bullard on Friday. Take a quick look at next week's economic calendar. We have the Schiller home prices on Tuesday, CCI on Tuesday. We have jobless claims on Thursday, PCE inflation monthly on Thursday, and doesn't look like there's a lot next week. So yeah, I mean, there's still opportunity, I think, you know, so long as, you know, the macro stays the way it is and there's no new data or information that, you know, who knows how Wall Street will react, right? But yeah, let's keep our eyes peeled. Let's just remain patient. Do my best every morning to try and find relative strength charts that are tradable to the upside. It's been a little bit of a struggle the last, I would say, week to 2 weeks. But they don't, these periods, they don't last that long. You know, especially, market makers in Wall Street, they want to make their money too. And so they will, create these environments where stocks will start to rally, and we'll be sure to be ready. So thank you so much. Appreciate everybody that tuned in. Thank you for spending an hour on a Wednesday evening with me. I will catch you all in the markets tomorrow. Have a good one all.